All right, so it's a good quarter for banks. Thanks very much, Abhishek. And staying with banks, yes, bank sources tell us that there is no provision to convert additional Tier 1 bonds into equity. This comes days after the Bombay High Court quashed the administrator's decision to write off the bond. Sources say that proposals to consider conversion of this nature in the past have not found favour. Ritu standing by with the details. Ritu, explain to us where things currently stand in this matter.
Well, Shireen, there's been an overhang on the Yes Bank stock because of worries of the impact of the Bombay High Court ruling on these additional Tier 1 bonds, which the bank had written off back in 2020 as part of the reconstruction scheme that now the Bombay High Court has overturned. It was 8,400 odd crore worth of bonds. So what is going to be the impact is what is worrying the markets. But to begin with, reports suggesting that these bondholders may actually get equity stake in the bank in return for the bonds that they hold, which have now been written off but now upheld by the Bombay High Court, is factually incorrect according to our sources in Yes Bank, who indicate there is no provision in law which allows for such a conversion of these perpetual bonds into equity bonds because of the nature with which they've been structured. Secondly, back in 2020 when the reconstruction scheme was drafted, there were certain these suggestions were made by Axis Trustee and others who are bondholders of these AT1 bonds that perhaps instead of completely writing off these bonds, give us 20% in equity and write off the remaining 80%, but that was struck down. It was not considered by the RBI. It was certainly not considered by the government or the bank. So it has not found favour in the past, and it's unlikely to find favour now. Even the Bombay High Court ruling very clearly states that it does not want to rule on the conversion of these bonds into equity. So that is out of the picture. There's little impact on capital, even in case of an adverse ruling. The Yes Bank, probably along with the RBI, will soon move the Supreme Court to appeal this order. If there is an adverse ruling, merely the proportion of the Tier 1 capital will change, where the CET1 ratio may fall and the AT1 ratio will rise, but overall there will be no impact. And because these are perpetual bonds, the bank has the discretion to pay or not pay the interest. So, from all parameters, it looks like there will not be a significant impact on the bank. But yes, on future reconstruction schemes and what RBI does to tighten the rules around those.
Well, with the caveat that this is source-based information, we are waiting for official confirmation on the way forward. Ritu, appreciate you joining us here on this CNBC TV.